Alrighty, next thing up here, let's look at the around $3.7 million public account. Take a look at this. I'll share my opinion and perspective. Then we'll get into the stock I bought $22,000 worth of today. Okay, so looking at the public account. Today I actually bought more Adobe in this particular portfolio today. And that portfolio, so Meta's the big dog in the portfolio, 28% weighting. And the nice thing is since Meta stocks come down a bit and AMD's gone up so much, actually it's looking a little more even. There was a point where Meta was like 38% of the public account. Like it had gotten to really high levels. I think it got up to almost 40% at one point. But since a lot of other stocks are rolling now and Meta's come down some, it actually is a little more even weighted. So that's 28% of the portfolio, sitting on $852,000 gains there. AMD, we're now sitting on $270,000 of gains on that one. That's about 15% of the portfolio. Amazing's on is sitting on $143,000 of gains, about 10% of the portfolio. Nike's sitting on a $35,000 loss as of right now. It's about 5% of the portfolio. Palantir, $161,000 of gains. Obviously, I've sold the far majority of my Palantir shares this year because of, the valuation just went so insane. So, it's still a great percentage gainer, but the dollar amount doesn't seem that huge because I already took the big profits. But almost a 2,200% gain on Palantir, 4.5% weighting in the portfolio. EL stock now up $44,000, 4.5% weighting. Celsius, $66,000 of gains, 4.4% weighting. Cheesecake, $22,000 of gains, 4% weighting. SoFi, $107,000 of gains, now up 250+% on SoFi. SoFi's been a banger. That's about 4% of the portfolio. Google McDougal, now sitting on, that one's over doubled up our money now, sitting on $72,000 of gains. That's about, we can call it right around a 4% weighting in the portfolio there. So yeah, it was a good buy. That was a very, very good buy back in April for me there. PayPal sitting on $4,000 of gains, about 3.6% weighting. Adobe, we're actually down almost 9% on Adobe so far. We're down $9,300 on about a 2.7% weighting there. Elf up 946%, up 68,000. That's only a 2% weighting in this particular portfolio. Elf's a lot bigger weighting for me in some of my other portfolios. Do keep that in mind. Yeah, this is actually a small position for me compared to some of my other portfolios. I have much bigger positions in ELF than this. Fubo, up 15,000 on this one so far, 34% gain, 1.6%. Honest, 1%, 1.5%. Then we have American Express, Revolve. We have the Tesla Hedge, CRM there. Okay, $1.77 million of gains, and obviously it doesn't account for all the gains taken over the years, including, I've probably taken easily $500,000 of gains so far this year in the public account. Okay, so where are we at here? What am I thinking? Meta. I would love to add more Meta. It's a steal deal here. I can't. It's 28% weighting in the public account. AMD, same exact situation. AMD's still a buy in my opinion. It's likely headed to 300. Probably, I wouldn't be surprised if it's 300 in the next few months. But that one's still, it's too big of a weighting in the portfolio, 15%. You got to always account for what if you're wrong, right? Amazon, around 10% weighting. That one I could add a little bit more to. I wouldn't mind it. Nike, I'm probably about good with Nike in this particular portfolio, although I think it's a great price right now. It's about a 5% weighting. That's about what I feel good with there. Palantir, obviously not looking to add any more Palantir. This 1,000 shares, I'm just trying to really hold it for the super long term, just in case like Palantir becomes $1 trillion market cap or something like that, and it does like way better than I ever assumed. Estee Lauder, EL. So EL, basically Palantir, I have a bull case where Palantir is still a buy right now. My base case, Palantir is no longer a buy. It's actually dead money for the next 4 years. But just in case my bull case comes through, I got it there. Okay. Estee Lauder, I would love to add some more EL, but I'm probably about good. It's about a 4.5% weighting there. Celsius remains a buy now, but I'm probably good with Celsius as far as a weighting there. It's about 4.4% position. Cheesecake, I could definitely add this one. I wouldn't mind getting this one up to over a 5% weighting here. So Cheesecake's one I would like to add more to. SoFi, I'm good on SoFi too, about a 4% weighting there on this one. Comfortable. Google McDougal, I would have loved to add more Google, but Google's gone up so much, I don't actually think it's a big opportunity now. That doesn't mean Google can't make money over the coming years. I think it can still be a money maker over the coming years. If I didn't, I probably wouldn't own the stock. But the big money's been made now in Google. Like Google was a double up opportunity back earlier this year, and if you missed it, you missed it. It's just, like I said, there can still be money made here. It's just not the sort of money you had an opportunity to if you were buying 6, 7, 8 months ago. PayPal, I would like to add some more PayPal. I wouldn't mind getting that to a 4 or maybe a 5% weighting here from 3.6%. Adobe, definitely would love to add more Adobe. I could feel comfortable having Adobe as a 10% weighting. That's how confident I am in Adobe in the current valuation on that stock. I could feel comfortable having that as a 10% weighting in this portfolio. ELF remains a buy, no doubt about it. Fubo is speculative, obviously, but that one remains a buy in my personal opinion, although I'm mad at Fubo right now because they took away CNBC for right now. They're in a dispute in regards to that. Honest is a huge buy right now. Huge buy. Like that one, the fact that the stock's trading for two something, people fundamentally don't understand what's going on with Honest, the changes that are happening there and how they're extremely positive. And, I think, within 12 to 24 months, I think people will see the light and then they'll realize, oh, Honest should be a $5 plus stock. So they're just missing it in regards to that one, in my opinion. And when I say missing, I'm talking about the investors, not the company. The CEO is doing an amazing job running that business from almost bankrupt to, oh my gosh, cash pile to the sky. They're making positive changes, profitability. It's unbelievable. American Express is a great buy right now. The risk reward profile there, in my personal opinion, is phenomenal. So I would love to add some more Amex. Could Amex, if Amex was 10% weighting, I would have no issue with that. I could even take it at 15%. As a company, I feel very comfortable with. Revolve remains a buy. I actually bought that one in the Patreon portfolio today. Didn't buy it in the public count, but I bought it in my Patreon portfolio. And that one remains a buy, up 116% so far on that one. The Tesla hedge, I'm holding that for now. If things get shaky in December and market downdrafts, NASDAQ downdrafts, Tesla gets hit hard before year end, I could go ahead and cash out of that and put that into some long positions, maybe in Adobe or something like that. CRM, great buy right now, in my opinion. I would love to have that as maybe a 5% weighting in the portfolio. I probably wouldn't want to take Salesforce to 10%, but 5% I'd feel very, very comfortable with there for the public count. And so, yeah, I'm good. Am I looking at adding new stocks to public count? Not right now. I'm too busy with some opportunities. There's a lot of opportunities in the public count that, I just don't want to get distracted with buying new stocks in there when I'm not even done building out some positions. Like Adobe, I need to build that one a lot bigger position. Honest, I would like to build that one a lot bigger position. American Express, I would like to build a lot bigger. Salesforce, I would like to build a lot bigger. Cheesecake, I would like to build a lot bigger. So there's several stocks in here that are very attractively priced right now. And I don't want to get distracted by buying some new stocks in this portfolio when I still got unattended business here of adding to some of my current positions. And sometimes you just got to do that with your portfolio where you say, I'm focusing on what I've been buying and not focusing on new stock at the exact moment, right? Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in? Or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. Warning number one of these two I have to give out there. Okay, we've got a problem, ladies and gentlemen. I noticed it actually on yesterday's video I released on the main channel called 7 Stocks I'm Buying Now, December 2025 edition. We have a lazy epidemic starting that is transpiring here, okay? And there's a few reasons I believe this is going on out there. But basically, I'm kind of seeing it from some folks like, the most important thing whenever I do one of those videos is hearing how I make a bull thesis together. Like why, as somebody that's been investing in the market and picking individual stocks from 17 years now, right? You're almost never going to find somebody that's been doing it for as long as I have and actually investing their own money, right? A fund manager that invests a bunch of other people's money is a whole different ballgame. This is me investing my own hard-earned money for all these years, right? And so when you have that opportunity for me to go through like why I'm investing in a company, that's the important part. It's actually the exact stock I'm investing is not the important part. It's about the outlook. Like, how do I get to this? Why am I running these numbers? Why am I projecting this? What am I seeing here, right? In an industry and things like that, right? And some people like don't even want that part. They just want the base level stocks. Like, just give me the stocks. Like, and it's just like, oh boy, that's going to lead to big problems in the market. That's going to lead you to likely not making much money in the market, that's going to lead you to likely losing massive amounts of money in the market, right? And then you're going to blame it on somebody else rather than looking in the mirror and realizing you were the problem the whole time, right? And I think there's a few reasons why we have this kind of, I would say, a little bit of a lazy epidemic with some people out there. I would say 90+% of people watching this, you're not in this group, but I would say maybe it's 5%, 7% of people are kind of in this. One, now we're going into winter time. I think it's just something about winter, cold weather. People just kind of start getting lazy, right? They don't want to do research. They don't want to do any work, anything like that, right? And then the other reason is we got to admit it's been easy money since April, has it not, right? Like, think about this. A year ago, the public count is 2.9 mil. Today, it's about $3.7 million. That's incredible. Like, what an incredible move over the past year. But to make it even bigger, if we go back 8 months ago, $2.4 million is where the public count was in that downfall, right? So if you bought stocks in March, April, February, like during that whole drama time, I mean, gosh, it's been pretty dang easy to make money, right? From 2.4 mil to now 3.7 mil, the public count's gained about $1.3 million in just the past 8 months, right? It's incredible. So when you have a lot of easy money be made out there, sometimes people get lazy. Don't get lazy. Do not get lazy. No, okay? And then, starting myself out from my very humble beginnings of, making $8.75 an hour in the faux department of Walgreens, right? And before that, working at Einstein Bagels, and then working at Quick Trip and getting my first, decent job at Quick Trip, making $40,000, then $50,000 a year, and like grinding on this thing and start my real estate marketing company, and like, the grind and investing and all these things over all years, right? How have I been able to do that? Well, God, one, right? I mean, if, I could have got hit by a bus in 2009 and I wouldn't have been able to pull this off, right? 2, hard work. Lots of hard work and dedication. I mean, it's incredible, right? And then doing that in an intelligent way, right? I could have just been doing anything for hard work, but I always was thinking like, I'm going to try to maximize my income, try to keep my expenses in check, not have those get out of hand, right? And invest as much as possible and put a lot of my time into what I would call very high income skills, which if you know how to analyze financial statements, invest in companies, run valuations on companies, be able to judge business models is a very high income skill over time, especially as you start to run your numbers up. It starts to become one of the most powerful things you ever learn, right? And so to anybody out there that's a lazy person, listen, I don't like you. My fans don't like you. My subscribers don't like you. None of us like you. Get the heck out of here. You're not one of us, okay? We like to work hard. We like to work smart. We like to work hard, and you know what we do again? We work hard, and we grind. We're optimistic. We believe we're going to build a better life for ourselves than we have right now. We believe we're going to build a better world than what we have right now. We believe we're going to build a better time for our families and our friends than what we have right now. That's who we are. We're optimists. We're realists, and we're hard workers. So if you're a lazy bum, there's no place for you on my channel. There's no place for you with us. We don't like you. We don't want you here. You're not welcome. And that's the bottom line with that, okay? And so don't ever let those lazy bunch ever influence you guys. Make sure you're always willing to put in the hard work. You're always willing to outwork everybody. Because at the end of the day, the winner chicken dinners are the ones that actually outwork year after year after year and stay dedicated. And those people go on to live their dreams, right? And live to, whatever house they want to live in, whatever car they want to drive, wherever they want to go on vacation, whenever they want to retire. They choose it all. They choose it all, right? So that's first part. Second part is, okay, we got another problem going on out there right now. As Warren Buffett would famously say, the stock market's a device for transferring money from the inpatient to the patient. So what we've had transpire recently in the market is people are likely, I would say the average retail investor is probably down from where their portfolio peaked at maybe a month ago or maybe a couple months ago, depending upon what type of stocks are in and whatnot, right? So they're down a little bit. Some people might be down huge. It depends on what you're invested into. If you're invested into like those, super risky crypto companies and all that type of stuff, like you might be down 30, 40, 50%, right? Some of us are down like a few percentage points, something like that, right? But what happens is sometimes you get this like time period in between and people start getting impatient. They're looking for that dopamine high they were getting when the market was going up and up and up and up and up, right? And all of a sudden the market has a kangaroo time. Kangaroo time, we don't call it a bull market, bear market. And a kangaroo time, that's basically the market's going up, going down, but it's not really going anywhere. We're not crashing the market. The market's not uptrending. It's just kangarooing. It's like up a week, then the next week's down, up, down. It's not going anywhere, right? And that's the market we've kind of been in here recently. We're just kangarooing around. And no one knows really, are we about to make a big bearish move to the downside? Are we about to make a big bullish move to the upside? Everybody's just kind of waiting around, right? And so what happens is sometimes retail investors are remembering those dopamine highs and they want to chase those dopamine highs, right? So then they start feeling like they got to start making all these crazy moves and all these crazy decisions and trying to chase whatever is maybe hot at the market at that particular time and things like that. Don't do that. No. Stay focused on the long term of this game, okay? And always remember the Warren Buffett saying, the stock market's a device for transferring money from the impatient to the patient. So what you need to do, you need to adopt an attitude like I have had for the past 17 years, from a minimum wage worker to where I'm at today. I'm fortunate to be in the top 0.1% wealthiest people from my age bracket in the entire world. I'm very fortunate, right? And all from a little minimum wage worker, clean dishes at the back of the Einstein bagels, right? Had the same attitude for 17 years. Not a dang thing's changed. Listen, I don't care where the stock market goes short term. It's just entertainment. It means nothing. I'm not going to make any of my financial decisions based upon, if I think the stock market is going to go up or go down over the next week, over the next month, over the next year, over the next 2 years. It's all irrelevant. I do not care where the NASDAQ finishes 2026 at. It means nothing to me. Do you know what I do care about? Care about where the NASDAQ finishes 2046, 2036, 2056. That does matter significantly. If the NASDAQ between now and the end of 2026 goes down or up 10% or 15%, it doesn't matter. But I can tell you what does matter is if the NASDAQ triples over the next 20 years and you're not part of that. That matters significantly. So remember that, ladies and gentlemen, okay? Adopt the same attitude I've had. I don't care what happens short term, okay? I'll tell you about a conversation I had with a friend very recently, okay? This friend, he bought a house at peak real estate market, Las Vegas, back in around that 2005, 2006 time frame, okay? And right after that, prices started to plummet in Las Vegas. And prices on real estate went down like over 50%, right? So my friend, he left the real estate market, decided to never buy another house again, just was a renter, right? Ever since. And he, somebody that knows math very well, like very, very well. But he tries to act like math doesn't exist when it comes to real estate. And I said, you could have built a great fortune over the years if you just stayed invested, right? And same thing happens in the stock market like real estate. So I said, okay, here's your example. 2005, you bought a $400,000 home, $80,000 down payment, right? Home nowadays is worth $500,000. So you didn't get much appreciation because you bought a peak market at that particular time. So that exact home in that neighborhood's worth $500,000 now, right? Your equity now would be around $400,000 or so. These are just rough numbers, right? I think the example is actually more bullish than what I have for numbers. Keep that in mind. I said your possible rent for that house in that neighborhood is now about $2,500. So, okay, some years pass by, right? Now we're in 2008. You've been saving. So now that same home dropped over 50% in value. So now those same homes in that neighborhood you could have picked up for $160,000, right? So now the down payment on that's only $30,000. The home nowadays is worth $500,000. Your equity is probably about $450,000, and your possible rent's $2,500. Then comes 2011, so you're saving over the years, right? 2011, $190,000 those homes are up to in that neighborhood now. Down payment, $35,000. Home worth $500,000. Equity is now about $400,000 in that particular home. Possible rent's $2,500. 2014, save up some money. Those homes are now $250,000. Down payment, $50,000. Home's worth $500,000. Equity of that home's about $350,000. Possible rent's $2,500 a month. 2017, those homes are now valued at about $300,000. Down payment, $60,000. Home's worth $500,000. Equity probably about $250,000 on that particular house. $2,500 rent. 2020, you buy another one. Those homes are now priced at about $350,000. Down payment, $70,000. Home worth $500,000. Equity about $200,000 in that one. $2,500 a month of rent. in today's money, right? 2023, buy a $500,000 home. Those homes are now valued at, right? Down payment, $100,000. Home worth $500,000. Your equity's about $100,000 or so. Possible rent, $2,500. So in 2025, you have equity between all those homes because you just stayed in the real estate market. You didn't sell, you didn't foreclose, you didn't short sell, anything like that, right? You stayed in the real estate market. You kept buying over the years. And what do you have to show for it? $2.2 million of equity. $2.2 million of equity. And I think my numbers are low here. Your possible monthly income from those rental properties is $17,500. Your possible rent income on a yearly basis is $210,000, right? Now my friend tries to argue back. I say, you refuse to use math on this subject. $425,000 is what you have invested over that time, right? And keep in mind, it wasn't in one lump sum all 20 years ago. It was like over the years, right? $425,000 into $2.2 million is amazing, right? I said it throws off 6 figures plus a year in profit, right? When you take into account like what you might be still paying on those mortgages, when you take into account like, stuff you have to fix around the properties and things like that, maybe a rental management fee, you're still clearing like $100,000 plus in profit a year, right? I mean, it's incredible, right? And so the same exact thing I just ran you through with the real estate example, that happens in the stock market. You stay invested and you make fortunes of money over time, right? You stay invested. And when you get those crashes, corrections, all that stuff happens, you have to be ready and willing to buy, especially when it's ugly. And so for somebody like myself, because of the way I think, my attitude, it's easy. Didn't matter when I was broke, as in like, I had $1,000 to my name or $2,000 to my name. Didn't matter when I was middle class, because I'm one of the few people that's been in poverty on food stamps, and I've been middle class, and I've been rich, and then super rich. So I've seen it all. Like there's nothing anybody can tell me because I've lived all the stuff. I've been the food stamp person. I've been the middle class person. I've lived the whole thing. And I live to be super rich. Like I've seen it all. And I'm just telling you, like my mentality is how you get to this place. I don't care what happens short term. I'm going to take advantage. I'm going to add to great assets all the time. And when they're underpriced and undervalued, I'm going to add extra aggressively. And that's how you climb the ranks. From somebody in poverty, maybe on food stamps, to, okay, now we're getting to the middle class. And if you want to keep working, you want to keep climbing, you can go from middle class to rich. And if you want to keep climbing after that, you can go from rich to super rich. And then if you want to go from super rich to like the top 0.00001% to like the billionaire class, you can keep going. Like it's as far as you want to take this, you can take it. That's up to you, right? But that mentality is massive.